Hey guys, this is Sumner Healey from thelandpioneer.com out here in beautiful Monterey County, California, exploring some land, getting in nature. One of my favorite things ever. Now, before we dive into this video, I just want to provide some context. So in this video, we've got Reid and Halie over from Parcelfunders.com. This is a video for any aspiring land investors, or maybe you're already a seasoned land investor. This is going to be a great video where you can learn how you can actually go and find deal funding partners. Not only do Reid and Halie help fund deals, they're just a great sounding board, a great resource. I kind of look at them as like a board of directors, right? I've got a deal, I want their 2 cents on it, I want help vetting the deal. They're a great resource to go to. So if this video is up your alley, definitely stick around and watch the whole thing. If you're just looking for some land to buy, well, maybe not a video you want to watch. No harm, no foul. On that note of buying land, we do have lots of new properties hitting the website, lots of new videos coming to the YouTube channel. So certainly stick around and hope you guys enjoy it. As always, thank you so much for supporting this channel and supporting everything that we do here at The Land Pioneer. And without further ado, hope you guys have a beautiful day. Take care. Hey, this is Sumner Healey from The Land Pioneer, and today I'm joined by Halie and Reid of Parcelfunders.com. How you guys doing?
Hi, good. How are you?
Doing well. Happy Sunday. So we're sitting here and we're talking shop today. Reid and Halie fit a pretty interesting niche within the world of land investing. They help investors like myself and potentially investors like you fund your deals. And so they've been in the business for a few years now. I'll let you guys just kind of take it away and give us a little bit of history about how you guys got involved in land investing. I've actually never heard the full story. So I'd be curious to figure out what the origin story of Parcelfunders.com is.
Yeah, so I started investing in manufactured homes for quite some time. And through that journey, I came across manufactured homes that came with land. And there was one manufactured home that was burned up, and I was a little nervous about it because I'd never dealt with an asset that was just land. So long story short, I was able to clear that home off the lot, and then we sold the property very, very, very quickly. And this was in like the Denver metro area. And that sparked my interest with land. And so I started buying a bunch of courses, going through those courses. And we also invest in storage facilities and unsecured debt. And we've got our hands in a lot of things. But we had this education. We initially thought, well, we'll start investing in land and doing the mailers and so forth. But we quickly determined we just didn't have the time. And so we thought, in other investment niches, we found really great operators. And then we funded the acquisition of, for instance, like debt portfolios where we were buying payday loans and other types of non-performing debt. And so what we ended up doing is we synced up with a debt collection agency, and that debt collection agency is owned by a good friend of ours, or he's become a good friend, and he finds the debt and then he collects on it, and then we split the proceeds. And so we thought, maybe we can do something very similar with land. And so that's when Halie kind of took the reins and said, well, let's see if we can make a go at this. And so in 2019, we started funding different land investors. And then just recently, we went through the process of testing it out, seeing, what works, what doesn't work. And we really saw kind of a market for us, or a kind of a lane for us to start funding other investors. And we thought, when we looked at all the other different funders out there, we thought we wanted to kind of elevate the playing field a little bit. So we came out with Parcelfunders. So anything else to add?
No.
Yeah. Well, I think you bring up a good point. This is one thing that I love about land investing. So I got a dog barking in the background. This is one thing I love about land investing is that if you look at other like real estate verticals, a lot of the stuff like syndication or hard money lending or things like that haven't been really introduced in the world of land investing. And I feel like you guys have done a good job kind of bridging the gap there with doing this, transactional funding and bringing that capital to the table. Which when I first got started in land investing, I mean, there was no one advertising that. There was one website from Jack and Jill, I believe. They had, and I couldn't figure it out. And I had to be like a student to even register on the website. it was just not user friendly at all. So ultimately, when I first started out, I was just snowballing the little capital I had, and it took me a long time before I could scale up. And even doing a $20,000 deal felt like terrifying, because I was like, okay, I'm really betting the whole entire farm on this one deal. And so it took me a long time to start snowballing that capital. Had I known that something like this existed previously, it'd be pretty incredible where I'd be at currently, but I'm not going to dwell on that. So just for context, I don't know if you guys can share the secret sauce, but how many deals have you guys funded since the beginning, which sounds like it was 2019?
Yeah, I think we're past 200 now.
Yeah.
Wow. Okay.
Yeah. I don't have the exact number, but I think we're past 200. Yeah.
Cool.
And every week it's just snowballing because there's more and more deals that are coming our way. And so,
and especially since we launched the new site.
Yeah.
It's been very
Yeah. We'll touch on that in a second.
Yeah.
So, one thing that I feel like you guys probably have a really good understanding on is underwriting deals. I would imagine the number of deals that you guys see coming across your table is immense, right? I don't know what the total inbound inquiries are on a weekly basis, but I bet it's a boatload. And I don't know how many out of those you guys are actually moving forward with. But I reckon you guys have seen a lot of deals, gotten pretty selective in terms of what works for you guys. So from a really high level overview, do you guys have like a kind of a target property size, a target region? Is there some parallels or commonalities you found in the best deals that you guys have funded?
Well, we are very open to explore new areas. Obviously, newer areas we do a little bit more research on. Size-wise, let's see, I think we did a fourth of an acre or larger.
Okay.
And then we kind of look at the deals overall. We have someone send in their due diligence, and we're willing to look at any deal, but the numbers have to make sense. So we do get a lot of deals come in. Some right off the bat just don't make sense to us to have a funder involved.
And typically, so what we're kind of looking for is fourth of an acre or larger. We'll look at less. It's case by case. The wetlands, a lot of properties have wetlands on it, so we like to see 25% or less wetlands on the property. We like to move the property within about 12 months or less. Ideally, we're looking to turn them every 3 months. So if you can sell it in 3 months, that's really the goal. And then we primarily like cash deals where we sell for cash, but we will entertain seller financing and selling that because we have other avenues where we can turn around and instead of just keep holding onto the note, we can turn around and resell that note to different investors out there. I'm trying to think we'll look at pretty much any property type, residential, commercial. Trying to think anywhere in the U.S.
Yeah.
Let's see, floodplains, it really depends. I mean, if we're talking Florida, a lot of that is in the floodplain area. And then other areas, not so much. So I think, we have to look at the market. We have to look at what properties are selling for. We look at how quickly properties are selling for in an area that we're thinking about funding a deal.
Yeah.
But activity.
Yeah.
Activity is important. If we go on and I'm looking at some comparables, we look at the buy to sell date as well as the properties that are for sale. And if they've only had like one view,
right,
30 days,
yeah,
probably not the best place to be.
Yeah. I'll work in a market that has very little sales data, and I feel comfortable with that. But I will never work in a market that's got too many for sale properties. This has always been the worst properties I've ever purchased. So, okay, a few things. One, I didn't know you guys were somewhat open-minded to the term stuff, but it sounds like in most instances you're going to turn around and resell the note. Is there a case where you'll ever just kind of carry the note with the investor, or is that really a no-go?
We are open to doing that. We like to get 20% down. Then it's a different price is what typically we think. So if we have a cash price, and there's going to now be the seller finance price. But we also like to do some deals, just normal deals first with someone before Reid will call it before we get married and
totally
we're stuck together for a bit.
Yeah, no, I hear you. Okay, so one other question too, just to kind of piggyback on that. let's say someone wanted to bring a deal to you guys. What's kind of like the floor and the ceiling in terms of buy price? Do you guys have like a minimum in terms of, hey, we're not doing deals that are less than $5,000? And then on the inverse side, do you guys have a ceiling where you're like, hey, this is kind of our comfort range, we don't exceed past this on a purchase price?
So we, thus far, like we've had people bring us deals where it was like $800 to fund, and to start the relationship, we were like, sure, let's do that. And we made a decent profit, but it's probably more so the sweet spot is when investors are bringing us properties between the $10,000 to $25,000 range.
Okay.
That's generally what we're finding, and we like to usually 2x or 3x when it comes to the sale price. So that's generally what we like to see. But if it's in a market that the properties move very quickly, it's not a hard and fast requirement. We're pretty open, and I know that's kind of like you're I guess you're trying to pin up jelly against the wall, and we're kind of like oozing around. But I guess what I'm saying is that we're really open to it. I mean, we do have our buying criteria, but sometimes the best deals have been when we have kind of gone outside of our buying criteria.
Right.
As far as the max amount, most of the time, we're comfortable going up to, I would say, probably up to 500,000.
Mm-hmm.
But most of the biggest deals that we've kind of done are right under 200,000 thus far. But that's because we haven't seen deals that are really worth, I guess, going up higher at this point. But if someone does present us with one where there is that amount of return, then we would definitely be open to it. I mean, we're looking at doing deals with individuals that are looking to do it more of a longer term play where they're taking like a 160-acre property and doing a subdivide. And so that's a longer period of time, of course, but the profits are there. So we've been exploring that too.
Yeah. So that's something that I found. I mean, I feel like the $10,000 to $100,000 range is really where the efficiency lies. And then outside of that, it just kind of falls off a cliff. I mean, it's true for the cheaper deals too, but once you get past the 6-figure mark, I've just found if you're not bringing in some way to kind of force appreciation, i.e. subdividing, it's just, I haven't seen deals out there that are super hot. But I know some people do find them occasionally. That's kind of like a needle in a haystack. That leads to the next question too. So you guys would potentially get involved if the numbers made sense on a subdivide type deal. Have you guys done anything like that?
We've explored it. One that was brought to us, we actually went through the property. And then it was like, hey, do you want to do this? We're like, no, that wasn't the original. Maybe next time. So if someone comes to us like this is the plan and has all the details and we explore it together before funding, we are very open to it.
And that was because it was going to change the timeline horizon to be more than a year.
Right.
And so that's why we were kind of not so keen on it. But at the end of the day, if the property's not moving, then we're going to do whatever it takes to sell that property with the investor. We're going to strategize with him or her and say, how do we move this property? Do we need to do a subdivide? We're not hard and fast with saying, well, we agree to this. We can't change plans. I mean, things change, but we have to move with whatever the market is doing.
Right. Yeah, that's one thing that I found. I mean, I have not completed any kind of land split or a major subdivide at this point. But one thing that I found is in most counties that I've come in with that game plan, to find a surveyor that isn't booked out for the next 6 to 8 months is dang near impossible. So I'm curious how that would affect your guys' profit splits on a deal like that. Because one thing I do want to touch on this in a little more better detail, but when I started partnering with deal funders, there was just this very binary black and white 50-50 split. You guys have kind of flipped the script on its head and changed the game a little bit. And so we'll touch on that. And I also am curious how that would relate to funding a subdivision.
Yeah. So I guess when it comes to like the subdivisions and if we're going to do that, I think it's more of a case by case. If it's going to be, with our current funding structure, if it's anywhere from 271 days to 365 days, it's usually a 50-50 split. And generally those deals, if it's a subdivide, it's requiring a lot of capital. You've got, surveys, you've got all kinds of other things that you're going to be doing, entitlements. So I think from our perspective, we would want to look at how much capital we're bringing to the table, what skill sets is the investor bringing to the table, and then come to a win-win solution. I mean, the worst case scenario for us is that we do a deal with an investor and they feel like we've taken advantage of them because they were in a hard spot or they wanted to just get the deal done. We want to make sure that it's a win-win and they continue to come back to us to say, hey, I got this other deal. How can we partner on this one? Because we want to see them scale and grow, because obviously that helps them, and then in turn it helps us too. So that's kind of our goal. So I don't know that I would be able to say, for every subdivide it's going to be a 50-50. It could be a 60-40 in their favor. It just kind of depends on how much capital is needed and how long that project is going to take, and so forth.
Okay, so context is king. Now, outside of the subdivided deal, let's just kind of walk through your guys' typical splits based on time. If you guys want to take them.
Yeah. Do you want to share the?
Yeah, so typically it's, so we have a transactional funding, which is usually 1 to 2 days. And then if it goes beyond 1 to 2 days, then it's 3 to 30 days is 30-70 split. So 30% goes to the funder, which is us, and then 70% goes to the investor, which would be someone like you. And then 31 to 90 days is 35% and to the funder, and then 60% to you. 65%. Yeah, sorry. And then 91 days to 180 days, it's kind of a 40-60 split. So 40% to us, 60% to you, and so on and so forth. So what is important to know here too is that's from the date that we fund the deal and the date that the money returns back to us.
Okay, cool. And so you guys obviously encourage people, pre-marketing, if the deal's in title, hey, they can kind of use that to their advantage. I feel like the incentives are aligned really well for the investor. Definitely put some fire under their butt to get the deal sold quickly. So appreciate that structure. And I would imagine that's probably a byproduct of just more deal funders coming into the space. Have you guys seen any changes in competition out there in the last year and a half, 2 years?
I have. I've seen some that are offering where they will, they'll market the property for you, and then they take a higher split. So I think it's like a 60-40 split. And then vice versa. If you bring the deal to them, then it's, and you do the marketing, then they take 40% and you get 60%. I think that we've encountered some investors that have tried going with those type of funders in the past, and some have had mixed success. And those investors have come back to us and said, "Hey, I like to be in control." And I think some of the other things that we've offered, where we have a loyalty program and a referral program, has really enticed them to continue to do business with us. And even before that, I think what really entices people to work with us is that they get our time as much as they want. So they can call me up, text me, and say, "Hey, I got this deal," or, "What are your thoughts about it?" It's all about strategy. They also get kind of an inside look into what we're doing in our other businesses. And they also understand that, we don't share, if someone came to us and said, "Hey, what's going on? What's the best area to invest in properties in?" Right. I'm not going to be able to tell them, "Oh, well, Sumner is really having a lot of success in this one market, and this is the strategy that you should do." Yeah. And I belong to some of those groups where I mingle with some of those funders, and it's not uncommon to hear different people talk about, "Hey, this is a great deal," or "This is a great county. Have any of your investors looked at this?" And I feel like that's just not. I think for me, if I was in your shoes, even though I believe in the abundance theory, I think that they should do their own research on the markets and figure out what works best for them. I shouldn't be, mouthing off what's working for my investors. So those are some little things. I mean, of course, we have a lot of other connections. We've built friendships with all of our investors, and just it's anytime that we're in their neck of the woods, we're I'm keen on just meeting up with them and having lunch with them and stuff, and just seeing how we can help them. So
Yeah, I agree. I mean, you guys have done a fantastic job just positioning yourselves. Like when I think deal funding, I think you too. I mean, definitely top of mind, and I would reckon that probably rings true for most land investors. So definitely appreciate how you guys have kind of come in and wedge yourself in a good way. And obviously you guys bring a ton of relevant experience in terms of land investing, but also some experience that is related, but it definitely, comes from different edges of real estate investing, which I appreciate. And I think that's one of the biggest things that I've learned from having deal partners. It's not just the money. Sometimes it's a sounding board, right? It's almost like having a built-in board of directors where you're going to them, getting some sage wisdom, getting some advice, and just getting a second pair of eyes on your deals. So super, super helpful. Now, if people want to send deals your way, parcelfunders.com, right? That's where they go over and they can just submit a deal on there. Do you guys have a typical format that you want to see deals submitted? Email?
So you can fill it out online on the Parcelfunders. That's basically just going to ask, I think, VPN county and then your contact information.
Okay.
We don't want someone to have to go through and fill a huge long thing out when they may already have something. So at that point, we'd reach out and ask for the due diligence. So whether it's a Google Drive,
like a folder in Google
any
Drive.
kind of folder, anything someone wants to share with us, the way they keep their own due diligence. That way, we're not making more work for anyone.
Right.
I think that's where we made the mistake initially when we had our first website, was that we expected all these investors to fill out this long, verbose form. And I kind of just thought, let me take a step into their shoes. And I was like, how would you fill this damn thing out?
Yeah.
It's easier to look at due diligence, and we get to see how they do their due diligence and how detailed, and like it tells a lot about a person on what they send over.
Yeah. And so I think what our point of basically is that we don't want to add any more steps in the process. We already know that there's some nervousness from maybe a land investor thinking, well, now I've got this other person that's involved in this deal. Are they going to tell me what to do? There's just a monkey on my back. I don't really, maybe there's a way that I can just fund the deal myself and I don't have to have this other person like barking in the background saying, did you do this? Did you do that? And we don't want to be like that. We want to be like your buddy and just saying, hey, watch out for that cliff. And did you think about this? Did you think about that? But just someone that's like helping guide them if they want it, or we'll just fund the deal for them and go from there. We just want them to use our knowledge as much as possible, or as little as possible.
Right. Yeah, it was one trepidation I had before getting involved with any deal funders, is I was like, they're going to be breathing down my neck constantly. They're going to be texting me on a Saturday night, hey, when's this property going to sell? You guys aren't like that. And ultimately, my experience with most deal funders is that's just not really the name of the game. But I appreciate the approach that you guys take. And I think to wrap things up, I've got one really just a personal question. You guys got your hands in a ton of buckets. I know both of you guys have professions outside of real estate, I think I'm correct in that.
Yep.
Do you guys make time for fun? And if you do, what do you guys like to do for fun? Seems like you guys are pretty darn busy.
So COVID has really kind of slowed our main thing. We love to travel.
Okay.
So travel is a big thing, and we're big foodies. So we like to go to new restaurants, and what else do we like to do?
Well,
yeah, hold on.
this guy.
Oh, there we go. A little fur baby. It's cute.
We love him.
He's
our
COVID.
Yeah. Did you guys get him during COVID?
Yeah.
Okay.
What's important to you when like you're vetting a funder, I guess? I'm what you look for when you're working with a funder, and what made you kind of say, Reid and Halie, I'm going to take a chance with them versus other funders. I know you've worked with other funders too, but what's kept you kind of coming back to us versus others? That's always important for us to know about.
Yeah, no, I think that's really good feedback. I mean, I think first and foremost, rapport, like just on a very basic level, is going to be kind of the starting point. Like, can I have a conversation with them? Do I feel like there's any level of synergy there? Outside of that, though, and I think when Reid and I had a phone call initially, what really stuck out to me was, relevant real estate experience, but again, in different verticals. And so just having that level of knowledge brought to the table, where I had only worked in the realm of land investing, which land investing it's an oddball industry. It's an oddball space. And I had aspirations to want to get involved in other aspects of real estate investing. And so having that relevant experience brought to the table, huge for me. And then just an overall level of responsiveness. Like I've worked with folks that are funders that have, land investing businesses themselves. And I've worked with funders they just have capital sitting on the sidelines, and they're not super involved in anything to do with real estate investing. And the biggest bottleneck that I've run into with those folks is either the land investor is so busy running their own business that they're not signing title docs, they're not quick to the draw. And then on the flip side, the folks that don't have any real estate experience but have some money sitting on the sidelines, well, it's a lot of the same, right? They don't really have the urgency to get the deal rolling. Oh, I'll wire the money in next week. It's like, no, closing was today. You got to wire the money in today. So things like that, where I feel like you guys have a good appreciation of how the business operates. And so you guys definitely are quick on the draw. You guys take it seriously. But on the flip side, you're not breathing down my neck. You're not breathing down other investors' necks and kind of like pushing the deal forward in a way where, we can try to create demand, but at a certain point, the deal is going to sell itself and you just need to kind of hold out and let that happen. So I've worked with, in total, a little over 25 different deal partners, and I've run the gamut of people that are just like way too pushy and think I can snap my fingers and sell a deal. And then on the flip side, people that are kind of negligent and not taking it seriously. So that's huge for me. If I had to sum it up, it's rapport. It's having like a real experience that I feel like that I actually get value from it outside of just bringing capital to the table. And then the third point is just understanding how the business works. So, being expedient where we need to be expedient, but also not pushing things where we just can't really push, right? So
I think there was one thing that I wanted to mention that we also bring to the table is that when we're looking at a deal, we're not looking at it just from our experience, but we're looking at it we learn from each one of our investors that we fund. So we've learned some things from you, Sumner. We've learned some things from others, and we incorporate that back into our due diligence process. And so when we're looking at a deal, we're pulling all that information in from 20, 30 plus investors to say, okay, what does this deal look like? And I feel like that adds value to each one of the investors that we work with. I mean, you should tell them just real quick what happened with that deal yesterday.
So we had a deal that came in, looked good. The due diligence, that was sent over, was very detailed.
Whole video. I mean, the guy recorded everything. It was beautiful. I was like, wow, this is amazing.
But started to kind of look into it, and the area, we were a little bit like, well, what about these comps? And I just kept digging a little bit more and a little bit more. And we have data trees, so sometimes we can pull comps on there as well. Typically, they never work. It doesn't give you enough for the detail, it just isn't helpful. But this one, it was very helpful. So I was like, oh, let me go see what the comps say on here. And it was so helpful because it's definitely not a deal that we would do. And so we shared it, kind of made a little chart with all the information and split out all the different comps and, compared them to what the actual property was. And I think we were going to be walking off a cliff. And so send it to the investor. They were very thankful. They're going to go back to the seller and see if, anything can be done on that end. But it's just stuff like that. You learn as you go. We learn as we go. We've made mistakes with investors that were like, oh, well, guess we should check that next time.
So the buy price that the investor was going to pay was around 80-something thousand, and the property was really worth market value around 50.
Whew.
So, and he was gung ho about it until we kind of gave him the fact that some of the properties that he was using the comps for were farmland. His was not farmland, or they were waterfront. And so we came back and said, hey, these are the comps. Did you see these comps? And then we talked to a local broker. Local broker kind of shared with us that it wouldn't come anywhere close to what the price was, what he was expecting. So, I mean, who knows if he'll still continue with the property or not, but I feel like that could have been a pretty big mistake on his part. And other funders if it's just dumb money, like I call it, they just have money on the sidelines. I don't know that they would have gone through that effort to really determine that, and then what would happen in that scenario. So
yeah, I agree. I mean, that seller is probably about to have a field day. 50K property is going to get an $8,000 offer on it. But that's one thing I've noticed too, is that like, if you're starting in this business and you're fortunate enough to have liquidity, it's still in your best interest to utilize partners, right? Like, not only are you going to be able to do more deals, but also just having that second pair of eyes on it. And so if you're new in the game and you do have liquidity and you do have funding, doesn't mean that you can't take advantage of something like Parcelfunders or any other funding solution out there. So I do have a hard stop at 11. I am watching both my siblings this weekend. I'm playing the role of a single father. It's been very difficult. I've got two 16-year-old siblings, and it's actually a lot of work. So I appreciate you guys. What?
likewise.
Yeah. So hope you guys have a good Sunday, and I'm going to put all of your guys' contact information down below. So anyone watching this video, if you want to get in touch with Reid and Halie, parcelfunders.com, links will be down below. I'll include your guys' email address to info@parcelfunders.com. So hope you guys have a great Sunday. I appreciate you guys making the time. I'm sure I'll talk to you guys next week.
Yep. Talk to you soon. See
Take
ya.
care, guys. Bye.